Dear viewers, welcome to our channel GVS Bank Academy. Today, I am going to discuss about Indian economy and Indian financial system, JAIIB paper number 1, Module D, Unit 31. JAIIB, Indian economy, Indian financial system, Module D, Unit 31, capital markets and stock exchanges. This topic is also useful for CAIIB and bank promotional exams and interview also. This is useful. Now presently for May and June, May JAIIB examinations, June CAIIB examinations, you are conducting revision classes for JAIIB and CAIIB for forthcoming examinations. Interested members are requested to contact on this number. Capital market and stock markets. Point number 1, capital market. It is a place, it is a market, it is a place where long-term debt means bonds, debentures, equity shares are traded, exchanged. Capital market in the stock exchanges. Again, primary market. Capital market is divided into primary markets and secondary market. Primary market means public issue of shares, public issue of bonds in the market. Primary issue. Security issue, shares, bonds, debentures are offered to the issue. Public issue, follow-on public issue, these are all primary market. Major intermediaries in the primary market such as merchant bankers, these are all merchant bankers, issue managers and lead managers. This is secondary market. After allotment of shares, the securities, the shares are going to be traded in the stock exchange. Secondary market. Trading of shares, bonds, debentures in the market. Now presently BSE stock exchange is there. NSE stock exchange established in 1992. Indian International Exchange is a subsidiary of BSE situated in International Financial Service Center. NSE IFSC, International Financial Service Centers, Gift City, Gujarat, Gandhinagar. These are the major stock exchanges are NSE, National Stock Exchange, BSE. Fourth point, depositories. As of today, there are 2 depositories are there. NSDL, National Security Depository Limited, and Central Depository Services Limited. These 2 depositories are converting the physical shares into electronic shares. Now, as of today, 99 to 100% of the shares are issuing in demat form only, either NSDL or through CDSL. These deposits held in the electronic form. 5 point, financial products, instruments trading in secondary market. What are the instruments are trading in the secondary market stock exchanges? Shares, preference shares, security receipts. Security receipts means the receipts are issued by asset reconstruction companies, and government securities, company bonds, debentures, zero coupon bonds, convertible bond. Initially that is issued in the form of bond. After some period, at a predetermined period and rate, the bond is going to be converted into equity. Commercial paper, certificate of deposit, treasury bills, these are taking place in secondary market stock exchanges. 6 point, regulatory requirements specified by SEBI for corporate debt securities. All securities issued by public issue must be listed on one or more. Any securities that are issued for public, that must be listed in 1 or 2 stock listing agreement. Any company is going for public issue, that must be listed in 1 or 2 stock exchanges. Now this is point number 6. Point number 7. Eligibility conditions for making an initial public offer. Eligibility conditions for making an IPO, initial public offer. Companies. Required net tangible assets at least 3 crores. The company net tangible assets 3 crores in each of the preceding 3 full years. So public issue prior 3 years, net tangible assets at least 3 crores. Out of 3 crores, more than 50% held in monetary assets, means in the form of monetary assets. However, the limit 50% of monetary assets shall not be applicable in case of initial public offer is made entirely through an offer for sale, where the 50% of monetary shall not be applicable, where in case the public offer is made entirely through offer for sale, means not through public issue. Second point, issuing company should have an average operating profit at least 15 years for preceding 3 years and a net worth at least 1 crore. So operating profit 15 crores and a net worth 1 crore during the preceding 3 years. Operating profit 15 crores, net worth 1 crore. In case of above conditions are not fulfilled, these above conditions, then the issuer can bring IPO only if the issue is made through book building process, electronic book building process, and the issuer undertakes to allot at least 75% of the net offer to QIBs, qualified institutional buyers or bidders, means institutional investors. This is the conditions for issue of making an initial public offer. These 3 conditions they have to follow. 8. Commonly used terms in the capital market issues. Now presently on cash delivery transaction, security transactions charges 0.1%. Now the rolling settlements are taking place trading day plus 1 day, next day, T plus 1 trading settlement cycle is presently. Third point, pay in day and payout day. Pay in day is the day when the brokers make payments or giving delivery to stock exchange. Pay in day means from broker side they have to make payments or they have to give delivery to stock exchange. Payout day is the day when the exchange makes payment or delivery of security to the broker. Anchor investor. Fourth point. Anchor investor means qualified institutional buyer who makes an application for value of at least 10 crores in a public issue. QIBs at least they have to make application 10 crores in the public issue of the company shares. Anchor investor. Who is a retail investor? Means an investor who applies or bids for security shares for a value not more than 2 lakhs. So retail investor means up to 2 lakhs he can apply. Anchor investor means here minimum 10 crores you have to apply for public issue. Anchor investor. Who are the QIBs? Qualified institutional buyers, financial institutions, scheduled commercial banks, mutual funds, foreign institutional investors, venture capital funds, state industrial development corporations, where their minimum net worth is 25 crores, that is the QIBs, qualified institutional buyers. This is the commonly used terms in the capital market. Non-institutional investors. Non-institutional investors means high net worth individuals. Non-institutional investments is other than QIB or other than retail individual investors. 8th point, green show option means an option of allotment of equity shares in excess of the equity shares offered to the public. Why? Whatever the shares offered to the public, in addition to that, they are issuing more shares as a post-listing price stabilizing mechanism. Under this mechanism, they are issuing at least 15% of offered shares, more than offered shares to the public. Securities lending scheme, ninth point. Securities lending and borrowing scheme is a scheme which enables lending of ideal securities by the investor to the clearing corporation, stock exchange. Offer document means prospectus. Offer document means prospectus in case of public issue or offer for sale or letter of offer in case of right issue. So, which these documents has to file with the register of companies and with the stock exchanges. Prospectus, letter of offer, right issue documents, they have to file the ROC and stock exchanges. 11th point, red herring prospectus is issued by a company to raise capital from market under book building process. Red herring prospectus issued by a company, the company is going for public issue under book building process. In that prospectus, price of the share, issue price or number of shares not mentioned in that prospectus. Red herring prospectus, issue price, number of shares they are not mentioned in that. Further, the RHB, red herring prospectus, contents consisting of business description, financial information, risk factors, use of proceeds, overview management. In the red herring prospect, they have to mention the following: what is the business description of the company, financial information, financial figures, what are the risk factors associated with investment, how the public proceeds are using, industry overview management. Capital 12th point, in a 100% net offer through big building process, allotment of shares. Okay, retail individual investors, minimum not less than 35% of the amount of share they have to issue. Net offer through big building issue, retail investors not less than 35%, non-institutional investors not less than 15%, qualified institutional buyers not more than 50%. So, CAIIB is not more than 50%. This point is very, very important point. Already 2 or 3 times they are asking in the examination also. So, retail investors not less than 35%. Non-institutional investors not less than 15%. Qualified institutional buyers not more than 50%. This we had already discussed here. Offer document means prospectus in case of public issue, offer for sale, letter of document which are filed to this. In a intermediaries in the issue on the primary market. Who are the intermediaries in the public issue? Book runners, lead managers, merchant bankers, safety net scheme and cut-off price. At what price they are allotting, they have to disclose. Public issue, initially the company is going for public issue, initial public offer, public issue, initial public offer, IPO, FPO, follow-on public offer, right issue, issue of share to the existing shareholders, that is called right issue. This is the public issue. And a private placement is an issue of shares, private placement, issue of shares, bonds, convertible securities by a company to a select group of individuals or persons. So, not public issue. Private placement in issue of shares or debentures to a selected group of individuals, firms, persons, CAIIBs. That is there. This point, application supported by blocked amount. Under ASBA facility, investors can apply in any public right issue by issuing their bank accounts. What is the benefit of application supported by blocked amount? ASBA. Under this facility, the investors who are applying to public issue, the amount is which is there in their account, it is there in their account only till the allotment of shares. The amount is going to be applied amount is going to be blocked as lien under lien to the public issue. After allotment, the amount is going to be debited automatically to the ASBA account. If there is no allotment of shares, the lien is going to be lifted by the agency. This is called, what is the benefit to the investor? Amount is there in his account. Number two, they are getting interest for that period also. That is the benefit. A qualified institutional placement is a private placement of equity shares or securities convertible into equity shares by a listed company. Private placement of qualified institutional placement is a private placement of equity shares, securities, bonds into listed in a company to CAIIBs, qualified institutional buyers. Qualified institutional buyers only. The issue is managed by SEBI registered merchant banker. These are the contents of commonly used terms in the capital market are very, very important, and they are asking in various examinations, promotion examination, even interview, and in some examinations in bank internal syllabus also promotional examination they are mentioning as stock capital market, etc. So this is very useful for JAIIB and other examination also. Thank you very much, viewers, for extending support over this.